Hello and welcome everyone to the week ahead commodity report for the 14th to the 18th of January 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And today, of course, we will be going through our price forecast for gold, silver and crude oil as we head into next week. So again, over the last week here, we have seen some quite explosive moves on the commodities here, with especially US oil taking the limelight over the last week with 9 days of consecutive gains, led by US-China trade hopes. In fact, US oil prices are up 7% over the last week and up 12% so far in January. That's of course after US oil prices bounced off $42 per barrel in the month of December. In terms of the precious metals, we have definitely seen a consolidation week here for gold, silver and also platinum over the last few days, but ultimately gold has edged higher here on Friday on expectations that the US Federal Reserve might halt its monetary policy tightening cycle. So with that, let's move over to the charts and we'll talk you through the key levels that we're looking at as we go into next week. Firstly, let's move over to US oil, and this was identified last week as a trade idea here as well, and I hope actually some of you did manage to capitalize on this breakout. It has delivered for us 330 points over the last week. Ultimately, what we were looking at here in terms of crude oil for a trade setup was the potential to break through this downward trending channel, which had been in play since oil prices began to correct at the beginning of October. Last week into the close, we retested that zone of resistance, and it was in fact on Monday where the price action broke above that zone, closed above the 20-day moving average, and you can see here where we've been building up some pressure at the previous level of support, which was turning into resistance, which effectively a breakout from that zone gave us our entry to get long, and we've capitalized on that breakout to the upside and banked here our 330 points. Now what I'm looking at as we go into next week is going to be pullbacks as buy opportunities. I am anticipating the potential for a revisit back towards that previous level of support again here. We could actually start to develop into a head and shoulders pattern here as well, particularly given that oil prices pull back 2% into the close on Friday. So what I'm looking at from a trade idea point of view is the potential for oil to pull back, come back towards the $50 per barrel level, and from here, if we see evidence of support, I would be looking at the potential to buy back in at that zone, then ultimately looking for a target of $55 per barrel here on US oil. So then what I want to do is just take you out to the weekly chart here for oil. We can have a look at this together. In terms of the price structure we're seeing at the moment, you can see very clearly a V-shaped reversal on the weekly chart. We've found support certainly at $42 per barrel, which has been a very important level going back to the last couple of years here, back to 2016. We can see where the price action has found support at that level previously. We've now seen over a $10 move to the upside, so over a 1,000-point move off the lows here from mid-December, and we're certainly building this price structure on the weekly chart, which could lead to further gains here as we continue to go through this quarter and of course into April as well. So there could be quite a lot of upside left, so therefore we're looking to start to build positions here as we progress throughout this quarter and of course as we go into the summer months here as well. So the next major levels I'm looking at, we've broken above the $50 level. I'm looking then at $55 per barrel as the next major target here, which from the current price right now is approximately about 350 points, but I'd look for a pullback buy opportunity on that as long as we do see that. Obviously, if we don't see follow through to the upside and we get some sort of corrective low, a pullback again back towards a 45 or $42 zone, we would wait and be patient and we would take opportunities as they arise if we were to see a sell-off to the downside. But at the moment, certainly the price structure here on the weekly chart is constructive, and it's also constructive on the daily chart as well, where we've now broken above that downward trending channel, which has been in play since October. So absolutely, I would have oil on the radar here as we go into next week. Now moving over to gold, gold has now seen 4 consecutive weeks of higher closes. You can see here where the price action closed at $1,287 per ounce on Friday. Over the last week, we have seen a consolidation, and that's to be expected given that we have such a key level of resistance overhead, which is at 1,200 and approximately $98 per ounce. You can see that has been a major level going back in the chart historically at this zone of 1,295. It's provided a lot of resistance previously until we eventually break above that zone. So the price action is stalling at that level. Now, going back to what we discussed last week, is typically the weekly range here for gold is around 200 to 250 250 points. This week, the low was $1,279. The high was $1,297. So we moved within a 180 point range, which has been tighter, in fact, than the ranges over the last 3 or 4 weeks here. So this week, we've definitely seen a consolidation around this time of year over January and February. Just to give you the stats on the average performance for the metals over the month of January and then also February as well, gold typically gives a return of 3% over January and 2% over February. Silver typically 5% over January, 3% over February, and platinum is typically 4% over January and 3.7% over February. Okay, that's historically in terms of percentage moves over these months. Now, bear in mind that platinum last week, when it broke out over 300 points to the upside after non-farm payrolls, it produced over a 4% return over January. At the peak of the move, platinum was up over 4%. So platinum has delivered that average percentage gain. Silver over the month of December gained by over 7% to the upside, and there's still more room for silver to go higher between really now and the end of January. Bearing in mind that we've still got another couple of weeks left of January, there's still potential for the metals to deliver their average monthly gains at this time of year. So then if we go back to gold and where we are at the moment so far for January, gold is ever so slightly up on the month at the moment. It's up 0.39%, okay? And normally over January, gold delivers a 3% return. And we're still within this upward trend right now, but we're definitely finding resistance just under 1,300. The expectation as we go into next week, of course, we should get a resolution of this. If we can break the neckline, so if we can get a break above 1,300, and then if you consider that gold week to week is still moving within approximately about a 200-point range, and for the most part, the open from the Sunday through to Monday tends to be around the lows of the week. So if we consider this, for example, that we're looking at a 200-point range again as we go into next week, if we were to see Friday's close be around the low as we go into next week and we springboard up another 200 points, this would then take us up to almost exactly the swing highs here going back towards the beginning of May. If we do get that follow through move as we go into next week, we're at a point where gold needs to resolve itself. Going into next week, I'm on the weekly chart at the moment, can see very clearly the price structure in the weekly chart where we've been developing this basing formation. We're very close now to potentially retesting the neckline here. And of course, then if we were to break 1310, that is where gold prices could then start to pick up momentum to the upside. They've got some work to do here, though, still, as we go into next week. We need to resolve this consolidation. Gold was to deliver what has occurred in previous years over January, which is a 3% return. That's where you could certainly see this breakout to the upside come to fruition. So I would keep an eye certainly on gold going into next week. The caveat to that, of course, is if gold doesn't follow through, if it holds resistance just under 1,300, and if it was to break back below the weekly lows here, because you've got an inside candle and also a inverse hammer there as well. If, for example, we were to see gold run out of steam short term around the 1,300 zone here, it rolls over, it breaks below the weekly low, then again you want to look at a potential 200-point decline there, which would take the price action back to around 1,267 US dollars. If we weren't to see follow through and the price action just rolls over and it breaks below the weekly lows, because we have indecision now on the weekly chart, although the overall trend is upwards, and I would suggest the probability at this time of year favors an upside breakout as opposed to a downside breakout. If we move over to silver, certainly the price action that we saw on silver over December was very constructive. So we saw a breakout to the upside over a 7% move, in fact, over December. And of course, at the moment, we're finding some resistance just at this neckline, which is not a huge surprise given the fact that when we broke through $15.60 per ounce here on silver, going back to July, we consolidated for about 3 weeks here before it then got going to the downside again. And we've broken above that level of previous support, which is now providing some resistance. In fact, we closed just about above it as well on Friday, but we are consolidating at that point where it's been a major level of support historically for silver around that $15.60 zone. What we might see next week now is the price action starts to springboard higher. We also have an inside candle here on the weekly chart. What I would look out for in terms of momentum here is if silver is able to break above the swing highs here, which reside at approximately $15.90. If we break above that level, that is where we could really start get going to the upside here over the next couple of weeks of January. We've had quite a tight range on silver over the last week. It's a 30-point range, so it's been fairly tight consolidation on silver, but this is going to build up some pressure pressure. So once we have a breakout, it could be quite sizable. And silver, of course, likes to do that. It likes to build pressure and then suddenly have these big breakout moves. And that's, of course, what we saw going back to mid-December after the FOMC statement, where silver broke above resistance, back above $14.77 per ounce, and triggered us for our long positions. Now, finally, moving over to platinum, very much like silver, platinum tends to go through these consolidations, and then in a very short period of time, it will increase exponentially in price. And that's, of course, what we saw going back to the previous week after non-farm payrolls, where we saw over a 4% gain over the course of that week. So we've banked profits on platinum. In fact, combine those with our profits that we had on oil this week as well. We're up over 600 points on our closed positions. We have over 850 points profit running at the moment, combined with our silver and gold positions, which we continue to manage as we go into next week as well. Just coming back to platinum here, what I'm actually looking at now is an opportunity to buy back into the pullback we're seeing at the moment. We've come all the way back down to $808 US. You can see very clearly that was a previous level of resistance, which is now providing support. So potentially as we go into next week now, I'm looking to re-enter into platinum. I will wait for confirmation to do so, but I would see the pullback at the moment in platinum as an opportunity to buy back into this once the correction is finished. Platinum produced such a large return in a short period of time. It's not surprising here to see a bit of a pullback, but I perceive that as a really good opportunity to buy back into platinum once we have confirmation to do so, with a view to see higher prices as we certainly get into February, where platinum typically produces a return of 3.7% over the month of February. So with that, I hope that helps. And of course, if you would like to join our community of successful traders at the Gold and Silver Club, there is an opportunity for you to do so. You can become a member of our private members live trading room program. As a member, you get access to exclusive live trading room webinars. You get real-time trade alerts, trading research and market insights, access to our private members academy website, and also access to support and mentoring. For more information about the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And also make sure you subscribe to our YouTube channel. That way you're kept updated with the latest commodity reports.